I'm Bill Gates, and people ask me all the time, Bill, what's the secret? How do you win at investing? How do you not panic when everything looks like it's falling apart? How do you stay calm when the headlines scream recession, inflation, collapse, crisis? And the truth is, there is no magic trick hidden in a vault somewhere. No cheat code, no billionaire, only shortcut, but there is a mindset that flips the entire game in your favor, a way of thinking about money, risk, patience, and discipline that almost guarantees long term success if you follow it consistently. I learned part of it from Warren Buffett, part of it from running Microsoft, part of it from global philanthropy, and part of it from watching thousands of people make the same avoidable mistakes over and over. You could call this the Bill Gates no lose investing mindset because that's what it really is. It is not about avoiding every loss. That is impossible. Even Warren, the greatest investor alive, has had losses. I have had failures. Every investor has. But the no lose mindset is about structuring your thinking and your decisions so that over the long run, you simply cannot lose. You either win big or you win small, or you learn and still stay financially safe enough to keep going. Once you understand this mindset deeply, investing becomes less emotional, less stressful, and a whole lot more predictable. Warren's childhood story about buying his first stock at age 11 is the perfect starting point. He bought City Service preferred at $38. It dropped to 27. He panicked. He stared at the numbers for days like his future depended on it. When it came back to 40, he sold. He felt proud of himself for not losing. Then the stock went all the way to $200. And suddenly he realized he had been thinking about everything backwards. Instead of trying not to lose a little, he missed out on winning a lot. That taught him patience. Yes, but more importantly, it taught him not to think like a person afraid of losing, but like someone designing decisions so he could win automatically, given enough time. When I was young, I did not think much about investing. I was obsessed with code, computers, and solving problems. But the same principles apply whether you are investing in stocks or in your own company. When we built Microsoft, people told me we were pricing our software wrong. They told me the personal computer was a fad. They told me IBM would crush us. They told me to grow faster, risk more, borrow more, but I did not want to build something fragile. I wanted to build something that could not lose long term, something inevitable, something so useful that time itself would accelerate its value. That is why Microsoft invested heavily in products that did not make money at first, like Windows, Word, and Excel, and ignored the crowd screaming for short term results. The biggest companies in the world today, Apple, Amazon, Google, Nvidia, and others, did the same thing in their own way. They made decisions based on long term inevitability, not short term volatility. That is the essence of the no lose mindset. Build or buy things that become more valuable as time compounds on them. Most people do the opposite. They buy things they do not understand at prices they do not really evaluate, and they rely on the emotions of strangers on the internet to tell them whether to feel good or bad about their finances. That is the exact opposite of the no lose mindset. That is the lose easily mindset, the panic easily mindset. And the modern market makes it worse. Social media makes fear louder. Smartphones make panic faster. Apps make trading easier. Almost every tool is designed to trigger your emotions so that someone else can profit from your reaction. That is why the first rule will always remain only buy what you understand. Warren understands Coca Cola. For me, understanding means more than knowing what a company sells. It means knowing why people buy it, what mode protects it, what risks threaten it, what metric predict its future. If I cannot explain those things in simple language, I do not touch it. When I invest personally today or through the Gates Foundation, I gravitate toward things I deeply understand: energy, vaccines, sanitation, agriculture, computing. I understand how those systems work. I understand what gives them economic durability. That durability is what makes them no lose investments. Long term, it does not mean they will not fluctuate. It does not mean they will not have setbacks. But over decades, they move upward because their purpose grows, their demand grows, and their impact grows. The second part of the no lose mindset is price discipline. Overpaying destroys portfolios faster than almost anything. During the dot-com boom, dozens of companies were valued like they were going to replace the entire economy. Most of them did not even have meaningful revenue. Warren refused to buy them. I refused to buy them. We both said the prices did not make sense, not because the technology was not exciting, but because the valuations assumed perfection forever. And when the bubble burst, most of those companies disappeared. Meanwhile, companies that truly created value like Amazon, Apple, and Microsoft fell too, but they eventually soared because their underlying economics were real. The no lose mindset means accepting that the market will tempt you constantly with hype, but you do not pay any price just because something is popular. You wait, you let irrational prices pass by, you stay patient until value appears, because in investing, the person who waits for the right pitch eventually outperforms the person who swings at everything. The third part of the no lose mindset is thinking in decades. If you look at a 1 day chart, you will think the market is chaos. If you look at a 1 week chart, you will think investing is gambling. If you look at a 1 year chart, you will see constant unpredictability. But if you zoom out to 10 years, 20 years, 30 years, you will notice something almost magical. Great companies almost always go up. Great innovators almost always compound. Great ideas almost always win. Time transforms noise into clarity. Think of it this way. If you had bought Microsoft, Apple, or Amazon on literally the worst day of the year for the last few decades and simply held on, you would still be extraordinarily wealthy today. That is the power of decades. That is the power of compounding. That is the power of ignoring the storm and focusing on the climate. Charlie Munger, Warren's longtime partner, used to say that investors do not lose money because they are dumb. They lose money because they cannot sit still. He said the ability to sit on your hands is one of the greatest superpowers in finance. I have seen this firsthand. Companies that look boring but delivered consistent value eventually outperform the exciting ones that flamed out after a few quarters of hype. The fourth part of the no lose mindset is embracing volatility. I know that sounds strange. Volatility feels like danger, but think of volatility as the price you pay for opportunity. If stocks never fell, you would never get a bargain. If markets never overreacted, you would never get extraordinary returns. Volatility is not the enemy. Panic is, fear is. Back in 2008, people thought the world was ending. Warren was writing that he was buying American. I was investing in innovations in healthcare and clean energy because crisis periods are exactly when long term thinkers get their best opportunities. Volatility triggers irrational selling create opportune prices, irrational prices create opportunities for irrational investors. Leverage is like playing with fire in a room full of gasoline. When markets are calm, leverage feels safe. When markets panic, leverage becomes lethal. Without leverage, you can wait almost forever. With leverage, you can be forced to sell tomorrow. The difference between those two outcomes is the difference between survival and collapse. I have never used leverage personally. Warren has not either. Charlie always said, if you are smart, you do not need leverage. And if you are dumb, you have no business using it. That is absolutely true. If you want a structure where you cannot really lose, then you design your financial life so that no one can force you to sell at the worst moment. The sixth part of the no lose mindset is focusing only on what you can control. You cannot control inflation. You cannot control interest rates. You cannot control recessions. You cannot control headlines, but you can control what you buy, how much you buy, the price you pay, and how long you hold. Those four things matter far more than all the external noise combined. When you stop trying to predict things you cannot control and focus on mastering the things you can, investing becomes dramatically simpler. You sleep better. You stop reacting emotionally. You start thinking clearly. You stop making your portfolio a hostage to your own anxiety. The seventh part of the no lose mindset is understanding Mr. Market. Every day, Mr. Market shows up with an offer to buy or sell at a price based on his emotions, not on fundamentals. Some days he is euphoric, some days he is depressed. Your job is simply to decide whether today's price serves you. If it does not, you ignore him. If it does, you act. That is it. The eighth part is this question. Would you still want to own this investment if the market shut down for 10 years? If the answer is no, be careful. You might be speculating. The no lose mindset always relies on real value creation, not emotional price movement. You want to own businesses that you would be happy to keep, even if you could not check the price on your phone every 15 seconds. The ninth part is avoiding over diversification. Real diversification dilutes your understanding. If you own 80 different stocks, you barely know you are not diversified, you are scattered. But if you own 10 or 15 great companies in different industries with different risk profiles, now you are diversified intelligently. You can follow them, you can understand them, you can make rational decisions. The 10th part is ignoring most advice, especially the noisy, urgent kind. Trading apps want you to trade, influencers want you to react. News shows want you to panic. The no lose mindset rejects the domain driven cycle of buy, sell, and replaces it with a calmer cycle study, buy, hold, wait, build. That does not look exciting from the outside, but it is incredibly effective over a lifetime. Now, let me go deeper into the emotional and psychological foundation of truly successful investing because you cannot adopt the no lose mindset unless you manage your emotions better than most people. Humans are wired to follow crowds, fear losses more than we enjoy gains, panic when others panic, and overestimate short term risks while underestimating long term rewards. Behavioral economics gives names to these patterns: loss aversion, herd behavior, recency bias, overconfidence, fear of missing out. If you do not actively fight these tendencies, they quietly drain your wealth. I've watched brilliant engineers, CEOs, and scientists, people who solve impossible problems, panic when their stocks fall 5% in a week. I have watched emotional investors sell a company that continues to grow cash flow simply because a headline scared them. I have watched people buy into hype cycles because they did not want to feel left out then lose everything when reality returned. The no lose mindset is about taming that emotional impulse. It is about training yourself to think clearly when everyone else is overwhelmed. Technology has accelerated everything: news cycles, communication, innovation, and unfortunately, panic. The speed at which fear spreads in the modern market is faster than at any other moment in history. A rumor can crash a stock in minutes. A headline can trigger billions in selling. That means today more than ever, discipline is not just helpful, it is essential. When I invest today, or when the Gates Foundation invests in vaccines, sanitation, energy, agriculture, artificial intelligence, or health innovation, we apply the same principles. We ask, does this investment create long term value for humanity? Does it solve a real problem? Does it improve the world in a durable way? If the answer is yes, we invest and we wait. We do not panic because a quarter looks bad. We do not change direction because someone tweaked criticism. We stay the course because we understand the underlying value. Now, let me add something from outside the stock market. Think about your career. If you choose a career you understand, a field that grows over time, and you practice long term discipline, you almost cannot lose. If you choose instead based on hype, panic, fear, or pressure from other people, you create a fragile path that collapses when challenges come. The no lose mindset applies to careers, relationships, health, innovation, and business just as much as it applies to investing. In the early days of Microsoft, when the internet first emerged, we were slow to respond. People said Microsoft would die, competitors said we were finished. Instead of panicking, we studied, we understood, we adjusted, and we rebuilt our strategy. We did not rely on emotional reactions, we relied on long term thinking. And long term thinking saved the company. The same thing happened when Sums appeared. Microsoft did not win that market. But Microsoft did win cloud computing, enterprise services, security, and now artificial intelligence, all because the long game matters more than losing a single battle. Companies like portfolios cannot win every fight, but if they structure their decisions correctly, they cannot lose the long term war. The same is true in health. A single illness can slow you down, but long term healthy habits, exercise, sleep, diet, stress management create a no lose foundation. You will still get sick sometimes, but you will not lose your overall health path. The most successful people I know, whether they are investors, entrepreneurs, scientists, or educators, all think this way. They create structures where temporary setbacks do not destroy long term progress, where failures become learning instead of collapse. Now, let me come back to Warren and Berkshire Hathaway because this story captures the no lose mindset perfectly. When he bought Berkshire as a failing textile company, the investor was dying. The margins were low, the future was bleak, but the price was so cheap and the long term optionality was so high that the downside was limited and the upside was enormous. He did not buy Berkshire to save the textile business. He bought it because the structure gave him long term leverage to build an empire of insurance, railroads, energy, and brands. Worst case, the cheap asset broke even. Best case, it became one of the greatest compounding machines in financial history. That is structural genius. That is the no lose mindset executed at the highest level. Even when plan A failed, the structure of the decision still allowed an even better plan B. So let me wrap this up with clarity. This mindset is not complex, it is not mysterious, but it is powerful. You understand what you own. You pay fair prices. You think in decades. You embrace volatility. You avoid leverage. You focus on what you can control. You use Mr. Market instead of being used by him. You stay diversified but not scattered. You ignore noise. You master your emotions. You build long term inevitability into your life. If you do these things, you cannot really lose. Time becomes your greatest ally. Compounding becomes your silent engine. Markets become a partner instead of a threat. And one day you look back and realize wealth did not happen because of luck or panic or perfect timing. It happened because you built it patiently, rationally, and unshakably. So here is my call to action. Start today. Start thinking long term. Start choosing value over hype. Start investing in things you understand deeply. Start building your financial life so that time works for you, not against you, and share this mindset with someone who is stressed, emotional, or overwhelmed by the market. Because once you adopt the no lose mindset, everything changes. Your decisions become better, your wealth becomes safer, your life becomes calmer, and your future becomes something you build, not something you fear. Thanks for listening. Now go create something you will be proud of decades from now.